Bitcoin just hit new all-time highs, but your favorite altcoin hasn't moved yet. What's wrong? Is it broken? I'm going to tell you what I think most people are missing, why I'm not selling, and what I see that I think the crowd is not seeing. The explosion is still coming, and if you're giving up on your favorite altcoin right now, you might regret that. It's easy to point and look at all the stuff that's going up, but what actually matters in order for your altcoin, probably PulseChain. If you're new to this channel, I like PulseChain a lot. I've bet a lot of money on Hex, PulseChain, and PulseX going up a lot. And look, if I thought these weren't going to go up, I wouldn't still be here after 5 years trying to onboard more people at the lows so that as many people as possible can experience these life-changing gains when it does go back up. But it requires waiting and not chasing. And so we can just look at the macro really quickly. Inflation, Fed rates, global M2, all these things, liquidity cycles are going up. This is the inflation, trueflation, the realistic index with realistic numbers coming from reliable sources and being averaged across a whole bunch of different data sources. This often shows a lower number or a more sustainable number than sometimes the government reports. Right now, 1.69%. These are the types of things that prime the markets for a pump. And yes, Bitcoin's at all-time highs, the stock market's at all-time highs. What you got to realize about altcoins is that they're very much risk on, so people need to be deep into that risk zone. And believe it or not, it's easy to just cuck yourself and watch, oh, Bitcoin went up, woe is me. We really are just getting started. Okay, we've had to deal with inflation. We've had to repent for our sins of money printing, well, the governments, the Federal Reserve. And it's a spectrum. So as people get more and more comfortable with risk, they don't start with the altcoins. They end with the altcoins. They first started Bitcoin, then Ethereum, then altcoins. And this is just the inflation numbers. All right, there's all kinds of macro signals that are much better than they were 1 or 2 years ago. And 1 year ago, about a year and a half ago, my favorite ecosystem, PulseChain, was 6x higher than it is today. And conditions were worse. And the user experience was worse. And there was much more liquidity. The conditions are much different now. And by different, I mean better. All right, now the CME, Fed Watch tool, is still saying that we probably won't lower rates by July 30th, but that's why they want to fire Jerome Powell. Okay, Trump is angry at him, even Fannie Mae, Freddie Mac, these are the guys that write all the loans for all the houses. These are the big people that move the money around for the world, that control markets. They are encouraged by reports that Jerome Powell is considering resigning. You know, a lot of people are suspecting that Powell's not lowering the rates like every other country, like China, like the UK. They're all lowering their rates. And people are starting to suspect Mr. Powell might be politically motivated not to, maybe just overly cautious. Occam's razor said he's not nefarious, he's just being overly cautious. But the federal rates to come down, okay, this is what money printer go burr means. When the rates go down, then people truly go risk on. Because don't you get this weird feeling, right? Like Bitcoin's at all-time highs, stocks are at all-time highs, but nobody's really celebrating or euphoric. Okay, maybe the Bitcoin guys that have been holding since 2010, 2012, whatever. Those Bitcoin guys are super happy. Everybody else, we're waiting for our altcoin picks because everyone understands that when you have critical mass in a community and a founder and good technology, you have all the pieces of the puzzle and low liquidity. These things can do 100x or more. But you need this storm of all the right things lining up, and we've got inflation. Okay, now we do have high interest rates, but we do have people wanting them to come down. A lot of pressure from Trump, from Fannie Mae, Freddie Mac. People want rates to come down, or they want Jerome Powell to get out and get someone else in there that's going to lower the rates. We can look at all kinds of macro indicators. I can keep showing you bullish stuff and just tell you that you got to be patient. All right, which is what I'm going to do. These are the credit spreads. Okay, notice how credit spreads are down. Look at how much down they are. What are credit spreads? Credit spreads are the amount of interest on loans going to more risky companies versus loans from the Federal Reserve, treasuries. Treasuries are considered really safe, and corporate bonds or junk bonds are considered high risk, and the differential between that is people's willingness to lend out to businesses, which is riskier, minus people's willingness to lend out from the Federal Reserve, which is like the lowest risk you can get. And when this differential is low, that means people aren't really too scared right now in the markets, okay? Credit spreads are low, this is good. One of many indicators flashing that we're cleared for launch, that you just gotta wait and it's gonna be okay. At least that's what we're all betting on here. And a lot of these videos that we all make, that I make, we're all trying to say the same thing in different ways over and over. Why our thesis is gonna work out. Now, I'm incentivized for things to work out more than most people. I'm positioned very heavily into this altcoin ecosystem, PulseChain. It's up to you. You could join the party, you can join the movement. A lot of people are just speculating right now. They're looking at kicking the tires, window shopping. And I'm here for that too. I'm here to tell you why. It's only a matter of time. Credit spreads are low. Okay, look at the stablecoin market. I can just keep pointing to macro indicators. Look at the stablecoin market and look at how it's going up. Going up by a lot. From 2018 to the present, when stablecoins first got invented, now there's billions and billions of stablecoins. Almost $250 billion of stables. And guess what? What chain do they launch stablecoins on? Pro tip, it's Ethereum. Okay, it's not Bitcoin. You can't launch stablecoins on Bitcoin. And some nerd out there is going to be like, well, there's some obscure Bitcoin layer 2 that has stablecoins. No one uses that. All right? People are launching stables on Ethereum. Ethereum is going to be the digital oil. It already is. The government, big government, wants to put you on the digital stablecoins where they can freeze all your funds. The CBDC, we've already had it. It exists right now. It's called USDC and USDT. And they're trying to push it on you, but the substrate is Ethereum. And you can still buy Ethereum at less than all-time highs, which I do have a bag of Ethereum too. And I'm bullish on ETH because ETH precedes alt season. And some people calling for the end of alt season. A lot of these guys are new. A lot of these guys are meme coin chasers and just not long-term believers with any conviction. So this fact that the stablecoin market cap is up to $250 billion, I mean, this is worth mentioning. This definitely gets a mention because what also happens to be tied to Ethereum? The PulseChain sacrifice wallet holding 161 ETH, currently valued at about $400 million. Well, if ETH doubles or triples, I think it can easily triple. Then you're looking at a sacrifice reserve of over $1 billion, and wouldn't that be fun? Imagine the kind of liquidity that could come into PulseChain. Not only from that, but from all the FOMO as well. Now look, we've got the global M2 money supply, usually a leading indicator, so they had to actually put this money supply forward. The white line, they pushed it forward by 3 months. So you can see how closely it actually tracks the price of Bitcoin as a leading indicator. So look where we're at. Doesn't take a genius to figure out M2 money supply is up. Bitcoin hasn't caught up yet with the fact that M2 money supply. Governments in China, UK, USA, the M2s are up across all the major superpowers of the world. And like I said, Bitcoin's at an all-time high, but do not cuck yourself here. Okay, it's awesome. We need this. We need all these pieces to unlock the alt season, the fabled alt season that you might not believe in, but I do. And we're going to see who's right and wrong. S&P 500, yes, it's at all-time highs too. And really, if you're not in assets in general, you should just be putting your money in assets. Saving money in a bank is, you're never going to get ahead. Governments are debasing your currency. It's a race to the bottom. But the S&P, it goes up nice and slow and steady, keeps you afloat. But crypto outperforms. And does Bitcoin outperform? Yeah, it has recently. Hindsight's 2020, and okay, Bitcoin went up about 10x. Congratulations to Bitcoin. Now I'm happy to hear this. I don't feel this jealousy that people feel of I should have done this, I should have done that. Because I know what I'm holding has way more than 10x potential. As we saw a year and a half ago, it went up 6x on almost no retail buying. A lot of the crypto market has honestly been the same people like PvPing each other with meme coin casino, just trying to take everyone else's money at one big poker table. There's not a whole lot of net new retail buyers, and that can be seen by the Google trends. I like to point this out. This is the Google search terms for Bitcoin. When Bitcoin was at its previous all-time high, people were searching for Bitcoin a lot. It was at the 100 mark on Google Trends, okay? Google Trends for Bitcoin. This was 2021. Now Bitcoin's at an all-time high in 2025, and the trends are at 25% of what they were at the previous all-time high. What does this tell you? Room to grow. Do you hear your taxi driver talking about Bitcoin? Not really. Maybe, I mean, it depends. It's more of a household name now. But we don't have altcoin season, crypto euphoria yet. If you were around for the last cycle, you probably remember what that felt like. This is not that. Google Trends are one metric that shows this. So yes, maybe it really all is this simple. First Bitcoin pumps, then Ethereum, then alt season. All right, keeping it simple. What if I told you that the cycle just got delayed? Okay, that the 4-year cycle might not mean as much as the global liquidity cycle, especially now that BlackRock has their slimy World Economic Forum tentacles into all the ETFs. And now that they've got control and they can manipulate the price with derivatives, and they can make it shorted, they can sell people fake Bitcoin, they can structure the bid to look like a linear growth rather than parabolic. This time is different because this time is slower, it's elongated. So as you get diminishing returns in amplitude, you also get a higher likelihood, in my opinion, that you have a lower probability of a predictable 4-year cycle. I mean, the 4-year cycle was only predicated on the Bitcoin halvening. That was basically it. And this year, we saw Bitcoin top before the halvening for the first time ever. So something's up there, right? Everybody wants things to be so predictable in a 4-year cycle. But at some point that will break, and I talked about this a year ago on a video of me assigning less importance to the 4-year cycle than the fact that Bitcoin is now a macro asset. It's a globally recognized, legitimized asset. We've never had crypto, and first of all, macro quantitative tightening for a while, repenting for our money printing sins, but also, global strategic reserves. The USA owns 1%, China owns 1%, BlackRock and the ETFs own 6% of all the Bitcoin, probably more when you consider the lost Bitcoin. This is new territory, okay? So it's very possible that the global liquidity cycle could dominate the importance versus some supply shock happening that was baked into the Bitcoin code. The less retail friendly things become, the more open to manipulation they become. But also, it would just logically make sense that cycles would become not only diminishing in amplitude, but elongated in time in both directions. So we're finally seeing that split happen. And that's okay, because we're patient. At least in PulseChain, we understand delayed gratification. In Hex, we've got people locked in for an average of 7 years. So the community of crypto that I believe in the most is the one with people that are staked in and locked for the longest. Myself, for example, been doing this for 5 years. And let's hop over and talk about those ETFs I just mentioned. It looks like in the last 4 days, we've had almost $1 billion come in the last week. $900 million of USD inflows into the ETFs. So it's Ethereum's turn. Okay, Ethereum's at 3K. Everybody's feeling it. And the numbers do not lie. BlackRock, Grayscale, Bitwise, Fidelity, these guys buy Ethereum. They mint paper ETH, and they let Wall Street and retail traders trade the fake paper ETH. But the good thing is they have to buy the ETH in order to mint the paper ETH. So we're entering this new phase where you're kind of no longer going to be front-running the institutions anymore. The whole point of crypto is to front-run Wall Street, and you can still do that in PulseChain. But time is running out for Ethereum. I mean, you still have time. Obviously, it hasn't even cracked 5K yet. But this whole crypto thing was supposed to be an asymmetric play, where you, the retail savvy person that's paying attention, can get rich before the rest of the crowd, okay? We've got record numbers of Ethereum shorts that just got squeezed out, sending ETH to 3K. And just look, record Ethereum shorts, they reflect hedging strategies, not bearish sentiment, just more interest in trading this asset in general. There's bigger numbers are now at play, shorts and longs. People do straddles and all kinds of like option strategies. We got this article says Ethereum holds a bullish structure and the derivatives market remains strong. The derivatives market is the beginning of the end of, retail spot, a pure market. But those pure markets, those unadulterated markets that aren't weighed down by derivatives, they also dump and pump a lot harder because it's a pure reflection of retail emotion. So I like these coins. They're hyper low liquidity. They might seem risky on the outside, but I know that myself and many others are fully financially invested in spreading the virality of Hex and PulseChain and PLSX by planting the seeds right now. I fully realize that a majority of the world does not know about us yet. And so I'm extremely invested in seeing these numbers go up, and you can be too. If you want to join this ride of a couple thousand people, you still are in the early stages. I mean, the price chart reflects that. The price chart of PulseChain, it shows a big prolonged accumulation phase if you're optimistic, or capitulation phase, I guess, if you're pessimistic. And if I'm talking to anybody new out there, I hope to be addressing at least somebody by talking about this now, because when the price goes up 10x, it's much easier to sell this kind of stuff. Look, obviously, I'm talking about my bags because I want my bags to go. This is what everybody does in crypto. But again, if we can get this chart to go up 10x, I'm nearly certain that there will be more buyers at that point, not less. And judging by this chart, clearly many people have left. And what remains are the ones with high agency, the ones that are more effective, the ones that take personal responsibility. We've seen a lot of the capitulators capitulate. And people do worry about, oh, what about the existing holders? Well, guess what? The existing holders that are left, that haven't capitulated, are the ones working to spread that virality, to do that marketing. So what's left, you've got these high agency diamond hands controlling the remaining floats, the remaining liquid coins. So inflation down, Fed gonna cut rates, global M2 rising, credit spreads are tight, more derivatives, short and long interest, more institutional buyers. And I think that the game for PulseChain has not actually started yet. Nobody's even looking right now. Picture the Fed rates back at 2%. Picture global liquidity shooting way higher. Picture Hex, PulseChain, and PulseX all 10x higher. And do you want to look back and have that regret that you sold early or you didn't get involved and you missed that first pump that could divide your overall life-changing gains by a significant fraction? You know what I mean? Like, subscribe, share the video, leave a comment. I'm going to keep working on communicating my bull case to reach as many people as possible and to explain it in a way that might resonate with as many people as possible. My time horizon is long, and so I'm not giving up anytime soon on this. I hope you guys understand that. I'll see you on the next video.